In this video, I'm going to answer the question, why did Bitcoin become so expensive? So then, why did Bitcoin become so expensive? The cryptocurrency Bitcoin has become a popular asset over the past decade. It's a currency that can be used for online transactions without the need for a bank or other third party. This has resulted in a lot of speculation. This is the reason why the price of Bitcoin is so high and volatile. One of the reasons that Bitcoin became so expensive is that it has a limited supply. The amount of Bitcoins that can be mined or used at any given time is capped at 21 million. This supply limit is not changeable, and is the main reason why it has become so expensive over the years. The reason that the limited supply of a cryptocurrency is a major factor in its price is that it increases its scarcity. This scarcity increases the value of the currency because it's less available than other currencies. Another reason that the limited supply of a cryptocurrency can increase its price is that it's more likely to attract investors. Investing in a new asset can be exciting, but the investment should also be considered carefully. It's important to understand the risks involved and how much you can afford to lose if the price of that asset falls. In addition to the limited supply of a cryptocurrency, the value of the currency can also be affected by its volatility. This means that the price of a cryptocurrency can fluctuate wildly and can cause investors to lose money if they buy or sell at the wrong time. Luckily, many people have an understanding of the limited supply of a cryptocurrency and appreciate its value. This makes it easier to understand why Bitcoin has become so expensive in recent years. A deflationary currency is a type of currency that doesn't grow in value over time. Unlike fiat currencies, which are printed by central banks and can be expanded or contracted at will, a deflationary currency tends to decrease in value over time. Because of this, a deflationary currency is often considered bad for an economy because it encourages people to save instead of spending. However, a deflationary currency can also be beneficial for an economy because it can reduce the cost of goods and services. Bitcoin's limited supply is a key part of its value, and it's something that Satoshi Nakamoto, the inventor of Bitcoin, had in mind when designing the currency. This is why he built the coin with a cap on its maximum supply. It's also why he made sure that the number of Bitcoins that could be mined would never exceed 21 million. In economics, demand refers to the number of goods or services that a consumer will buy at any given time. This is important because it determines the price of a product or service. It also affects the profits of businesses and the economy as a whole. There are many reasons why a product or service may be in high demand. Some examples are increased income, advertising, and changes in a person's preferences or tastes. If a product or service has a high demand and a low supply, it will usually increase in price. This is because people want to buy more of the item, and it is cheaper to produce a larger quantity than a smaller quantity. Another factor that could increase the price of a product or service is its value. This is when a product or service is worth more than it costs to make. Increasing the value of a product or service can be done by selling more of it at a lower price or creating a new version that has more value. Some businesses use this technique to create more profits and boost their bottom line. The price of a product or service can also be determined by its market size. This is a good way to find out whether it is worth buying or not. It can also help predict how much the price of a product or service will go up or down in the future. In the case of Bitcoin, the supply can only be 21 million. That means that the price of a Bitcoin can only go up as more people want to purchase it and more companies start accepting it as a payment method. However, this can also lead to a price drop if more people want to sell it at a lower price. This can be a problem for investors because it can increase the cost of purchasing a Bitcoin and may lead to people not wanting to purchase this cryptocurrency anymore. The price of a cryptocurrency is also affected by its underlying technology, which is a blockchain. This is a distributed database that records transactions on a network of computers. This type of technology can be expensive to operate, which is why cryptocurrencies are often associated with risk. Volatility is an important factor to consider when investing in the crypto market. This can affect the price of a crypto coin and the amount of money that an investor can make by buying it. Volatile markets are generally considered unpredictable and can cause the value of an asset to rise or fall rapidly. For example, the S&P 500 can gain or lose more than 1% in a single day. Some factors that increase market volatility include economic or policy changes, interest rate hikes, political instability, and war. These factors can make investors nervous and spooked by the possibility of market collapse, leading to an uptick in volatility. There are also specific events that can cause a stock or other investment to become volatile, such as storms that damage oil production or wars that diminish the import or export of goods. These events can affect a number of different industries, and the market can respond accordingly. Another factor that can increase volatility is a company's earnings. Companies that have higher costs for their products or services can see their shares fall in value. This can be especially true for companies that are based in areas that have a high cost of living. Lastly, government regulation can also cause the stock price of a certain industry to change. This is because of new regulations that can lead to increased compliance and employee expenses. A volatile market can be a great opportunity for investors, as it can help them get the most out of their investments. However, it is important to remember that all investments carry risk, so be sure to do your research before committing to a certain stock or investment. The price of Bitcoin has been highly volatile since its inception. This volatility is a sign that the crypto industry has a lot of growing to do and is still in the early stages of its development. It is expected that this volatility will decrease as the market matures and investors begin to understand the risks and rewards of cryptocurrencies. As crypto assets have become increasingly popular and have surged in value, governments have begun to explore how they can regulate them. The idea is that regulating cryptos would help protect investors from the volatility of the market. It also would make it easier for people to move their funds around. The government could then make cryptocurrencies legal tender, meaning that people could easily use them to settle debts and pay for purchase. But making a currency legal tender is not without risk. It can put a country in financial trouble, and it can be used for illegal activities. For example, the government of El Salvador was forced to downgrade its long-term foreign currency issuer rating by Fitch because of a large investment in bitcoins. Fortunately, there are many different ways that regulation can help prevent this kind of problem. For one, a government should commit at the highest political level to an explicit policy for regulatory quality. This should have clear objectives and frameworks for implementation. It should ensure when regulation is used, the economic, social and environmental benefits justify the costs, distributional effects are considered and the net benefits are maximized. The policy should also include a commitment to open government and transparency, which ensures that regulators are accountable to the public and able to be held to account for their actions. Finally, it should make it easy for the public to participate in the regulation process and contribute to its design. A well-designed regulatory system will be able to balance the need to promote innovation and the need to safeguard the public interest. It should be based on an appropriate scheme of accountability, which includes the right amount of redress for wrongdoing and the opportunity to challenge decisions in court. It should be able to have effective procedures and mechanisms for compliance, and it should be able to monitor compliance with regulations and report on the results. It should also have enough expertise to know how to deal with complex problems. While it may be expensive for the government to regulate cryptocurrencies, it might be worth the expense if it is able to stabilize prices and attract more institutional investment. This will increase the stability of the asset class and make it more attractive to retail investors. I hope you enjoyed this video answering the question, why did Bitcoin become so expensive? If you enjoyed this video, please like and subscribe to this channel.